Greetings and welcome to Business Day Television. This is Business Week, our very first edition for the month of November. As usual, joining me in the studio are my colleagues, Dr. Adeosun, who is Chief Economist of Business Day, and of course, Lolade, the editor of Business Day. We have quite a great lineup of matters that we will be discussing this morning. And I hope that you will join us and stay with us for the course of today's program. Before we get into the meat of it, first, the headlines, which is a roundup of key things happening around the world. Nigeria's foreign reserves are up by more than $500 million over a 2-week period, and the foreign exchange level has now risen to $43.17 billion. Boa Foods has become the most valuable stock on the Nigerian stock exchange with a valuation of 12.5 trillion naira. Wale Edu, the Minister of Finance and Coordinating Minister for the Economy, has asked banks to expand credit to small and medium enterprises, as well as to deepen the Nigerian capital market. On the foreign scene, OPEC and its partners are slowing down increase in output, fearing a glut in the global oil market. And from the United States, we hear that Trump has asked its military to begin to prepare action against Islamic militants who are alleged to be massacring Christians in northern Nigeria. Now, let's get on with it. In the course of last week, there was a report, Lolade, that suggested that the graveyard for Nigeria tech startups has expanded. What's going on? This, if you like, was like the light in a rather dark spell, but suddenly it looks like whether mismanagement or overreach is now become the affliction of this once prospering sector.
Yeah, thank you for that question, sir. So yes, the fintechs in Nigeria have been really in the limelight in the last couple of years, whether it's for their activities, their fundraising activities, or just the innovation that they bring to their services. But something is taking an ugly turn recently. In the last 3 years, you've had nearly a dozen of fintech companies, just closing up. And if you look at it case by case, I mean, the reasons vary, but the common thread really is that it's for them, some of them have placed unrealistic valuations on their businesses, they've raised significant funds, and then in the end, their business models just unravel. So for the most recent one, Lidya, Lidya is a company that provides quick credit, instant credit to Nigerians, Nigerian households and businesses, without any collateral. Now, it was always clear that that business model was really dicey. I mean, that's why you find that the banks don't, venture into that area of lending without unsecured lending, really. So, I mean, they raised $8.3 million in the space of 3 years, but they were struggling. You could tell the signs were there. So it didn't come as a surprise when in October, just last month, they announced that they were closing down. But so it's a mix of, if you ask what's the reason now, it's a mix of, not the best business model because there were gaps there. And then, of course, financial mismanagement. The company did say that it was struggling to maintain operations after a while, but it didn't add up because they were taking up a lot of costs that didn't align with the revenue that they were making at the time. So it was a no-brainer that they were going to collapse in no time. And it's really a sad indictment on some of the fintech companies you're seeing, because the same thing happened with Okra as well. Another fintech company that closed down in February 2025. They were into open banking as well as other services that came up, but they struggled as well because For them, it was more anyway of the wild naira fluctuations that we're seeing that just made their business valuations, unrealistic. So it's a mixed bag of fortunes for a lot of the fintech companies. But really, it's now casting this very uncomfortable spotlight on the sector that really used to be a very vibrant sector, known for raising funds. And now investors are taking another look at some of these companies and just asking really tough questions this time, so that they don't end up backing a company that can't survive 5 years. So it's really something to look out for. But the way it's unfolding, I guess the lesson to be learned is that before you even start to raise funds as a fintech company, you need to be sure that you have a business model that is very sustainable. You need to understand that you're operating in Nigeria, where there are risks anyway. Some of the risks that have led to the downfall of these companies are not new. So it's just proper planning and to ensure that you really don't bite more than you can chew. I think I'll stop there for now.
Well, I mean, Dr. Adeosun, Lolade has talked about, the lack of balance between the capital they are raising and their true valuation. They're probably running ahead of their time. But is there also a question about the competence of the people who lead these businesses? Many of the leaders of the tech startups in Nigeria are not tested. They haven't done anything meaningful in the past, and suddenly they have a huge pool of cash that they are raising. So is it in your view that there were always red lights flashing all around?
Thank you so much, sir. I'd like to first of all let's go back to the .com era. Even in the United States of America, here I would like to draw parallels, analogy, and metaphors. So I'd like to say very quickly that in startups generally, it doesn't even matter whether it's fintech or any regular startups, the degree of survival or failure is always in error. So let's say for every 10 startups, if 5 survive,
that's even too high.
I'm just trying to be optimistic. Then if 1 or 2 really succeed, all right. So I think what is happening in the Nigerian tech space is more or less, the big boys are being separated from the impact. These are things that crystallizes normally and naturally. Again, moving forward, it's also important to note that, like Lolade alluded to, there are 2 key things here: the fundamentals and also sustainability. When you talk about the fundamentals, we are even looking at the nature of the product. We are looking at the nature of the business model. The third point which you have brought in, sir,
competence,
the quality
of the leaders,
both in terms of the leadership and then the subject matter expertise. Then you also mentioned something that some of these people will tried and tested. You might have done a 10,000 naira project. The reality is different when you are doing a 10 million naira project, and then when you are doing a 1 billion naira project. The context matters, but you also see, and I'm saying this respectfully, that you see some element of youthful exuberance. So because we are young, and I don't mean any offense to young people, but you now eat a huge amount of money so quickly, and if you don't have, for example, a board of directors that you submit
that can establish clear oversight.
Clear oversight, you begin to buy cars, rent a yacht, go to Babylon, just too quickly. Too soon.
Interestingly, some of the founders of these companies that have ended up folding up are living other lives now, but they're very lavish lifestyles they're living. Some of them,
relocated.
Yeah.
Interesting. So, I wanted to ask, the problems that these fintech companies or fintech startups are having, are they peculiarly Nigerian, or as Dr. Adeosun says, there is always that element of failure in a startup?
No, I don't think they are peculiar to Nigeria. I mean, we've seen some similar trends in other African countries, but I think it's been more pronounced in Nigeria because you can't deny the fact that it's more difficult to do business in Nigeria compared to the other maybe tech hubs that you have in Africa, like Kenya, Rwanda, Ghana. So the likeliness or the likelihood of failure in those countries is less compared to Nigeria. That's the truth. So however way you look at it, Nigeria still finds a way to happen to some of these tech startups in a negative way, because I mean we're still struggling with basic infrastructure, that just drives up the cost of doing business for some of these fintechs and just makes it even easier for them to fail than succeed. So yes, it's not.
The likelihood of massive success
is also
of course because of the market. Yes,
so it's a risk balancing act.
True. But the beauty of it is for most of the other tech companies that are in all these other smaller African countries, for them, sometimes their market, 50% of their market is still Nigeria. Especially with the AFCFTA now, it means that, cross-border transactions are a lot easier and faster. So some of them still just go and set up shop there because they want to be sure that they can keep their business costs lower. And then most of the services or products is still targeted at the Nigerian market. Because like you rightly said, you can't discount the fact that we have such a huge population and it's, that's a huge allure on its own. But there are some inherent risks with doing business in Nigeria that sometimes proves too much for these startups to shoulder.
Interesting. Now, is it time for regulators to begin to tighten the noose? Because in the end, these failures will become a blemish on the attractiveness of Nigeria as an investment destination. So, or are we too early? We should just allow natural forces to take care of what's going on. Or should the regulators now rise up and begin to take a closer look at what's happening?
So let me jump in here. I've had the privilege in the past to have done some work with regulators like Lidya, especially because we are talking about fintech here. And I must confirm and confess that I've seen in the last 3-4 years, Lidya specifically, for example, trying to ramp up regulatory knowledge. And one or two forums, for example, it was clearly said that regulators actually play catch up when it comes to innovation. And fintech is a very innovative space
and very fast moving.
And experimental. I know the way regulators are, because it's typically embedded in government and bureaucracy. And so the degree of agility is, so the first thing I like to say is that even the regulator needs to do more in terms of knowledge, in terms of manpower, the quality, and the dexterity. They may need to try and appeal and attract some of these fintech players to join them. You can't regulate what you don't know.
Exactly.
Because we want to ensure that regulation is protective and not punitive. Having said that, I think the available laws, we can do better in terms of protection of investor funds. We can also do better in terms of, you mentioned Kenya, you mentioned Rwanda. You will see that generally speaking, cases maybe in courts are slightly faster and so on and so forth. These are some of the things that boost investor confidence. Again, it may look somehow, but today we don't have ambassadors anywhere. I'm also still speaking to governors. And some of the things ambassadors do is that they try and woo additional foreign investment. Yes, some will collapse down further. But what are we doing to even woo more? So that the ones that will succeed over time will be higher than the ones that collapse. Then when these funds come out, what are the banks doing, so to speak, to provide financial advisory services? All right. So the government should also have, like, let's say, a desk that can support. When you see a huge inflow somewhere, we are not saying just don't go there and tax. Say, what are you doing? What's your plan?
And how can we help you?
How can we help you? I'll leave it at that.
Yeah, I think to just piggyback from what you said about the need for regulation to always be moving in line with innovation, I think it's important. You can't really regulate what you don't understand. And, the fintech space is really guided by fast innovation at all times. So you find the regulators always playing catch up. But the thing is, look, how does Kenya, Rwanda, and the other countries we mentioned earlier, how do they go about this? Widespread collaboration and consultation. They work hand in hand with the leading players in the space. So they are always abreast of what's the new innovation and what's happening. And then they get this, that helps them in terms of just ensuring that, you don't have any company that's going out of course or anything like that. Just ensuring that you understand the innovation that is being put forward and you're already developing the regulations, because you can't have a situation where the regulation is always reactive and not proactive. It doesn't give confidence to investors as well to even come and invest in a country like that. So I think there's a lot of work for the to be done from the regulatory angle. But I'll just leave it at that.
I think the final point that I'd like to make, or a question I'd like to pose, will be how concerning should this be for the authorities in Nigeria, and what, in your view, should they begin to do?
So let me quickly jump in. First and foremost, it's concerning for everyone, because very easily you can see job losses.
Precisely.
Which is happening. You can also see
And then investment or wealth destroyed as well.
Destruction of investment and also investor
confidence.
Hopefully, what some of these investors also do, they invest maybe in 10 tickets and hope and aim that maybe like 4 to 5
will make it.
and then also cover up for the losses. So it's very important. We're also looking at the innovation potential. Don't forget that, like we have alluded to in our conversation so far, that these startup companies are the frontiers of experimentation, innovation, and also when they succeed, the ability to pivot and scale up is also there. So the government needs to sit up. We want to ensure, for example, to provide electricity power, either collaboratively with the private sector is very key. We also need to improve, for example, on our internet provision. It's still epileptic, so to speak, and don't let us be deceived that we are in Lagos. It's not everywhere in Nigeria that you have this level of internet penetration, access, and availability. So we also need to look at contract enforcement. So what's the dispute resolution? How, if I need to pull out my funds, and so on and so forth. And the last one, let me put IPCR. And this is not just government, all of us, we should focus more on training. So, for example, if you are a startup and you are not reading BusinessDay, you must be playing. Because there are many things you don't know that you should know. And if you know, your company will most likely not liquidate. So, knowledge is key. Training, access to newspaper
and application of that knowledge as well.
Absolutely. Absolutely.
Yeah, I mean, for me, I think it was 2 years ago now that I had this interview with Miss Andrew Ali, who used to be the MDC of AFC, but now with British Investment International. And we're talking about how, he goes about spotting the right businesses to invest in. And he says he rather invests in people, the people behind the businesses, than just the business itself. Exactly. You can get carried away by the fact that, this is a brilliant business idea, this is fantastic, let's go ahead. But if you don't have the right people who are going to be executing that idea, then you might have a big problem. So he says he is more interested in the people behind the ideas first. He goes and does his due diligence on the people, and it has really helped, yes. So I think from a funding perspective, I think investors need to really pay attention to that to ensure that they don't just invest in any type of business that then ends up giving a bad name to the entire space, because there's still some very brilliant fintech companies that are doing great things. Look at PiggyVest, for instance, Odunayo, Ewini. We did an article in the paper today just looking at how she's investing across 3 broad spectrums that's really helping Nigerians, and then really giving an extra boost to the economy. So she's doing well. There's some fintech companies like that. So I think I'll just stop there and say that the investor should really look beyond just the business idea to ask questions about the people, behind that idea.
Great. So what should we expect from this sector? The pace of investment into the sector, not only in Nigeria, but in many other markets in Africa, has slowed down. Cases like this of investment failures will further create discouragement. So what should we be watching out for? What should we expect from this sector?
I think for Nigeria, the fact that it's still a large market means that even though you have this negative vibe right now with these failures going on, you will still see there's still a lot of room for innovation in Nigeria, particularly. So you will still see that
size of the market is
yes,
key.
of course, would always be key. So it's just important that investors are more careful in the businesses they invest in. But whether that pipeline of startups, fintech companies, will continue to just push through, because there are a lot of opportunities because of the size of the market.
How about you, Dr. Adeosun?
So
What should we be watching out for?
I would say investors, some categories of investors will have patient time. So they want quick returns. And sometimes when you want quick returns like that, you look for big ticket items that sometimes they do. So I think we should step up our game with respect to capacity building and also due diligence, fundamentals, and then sustainability. Of course, risk is involved, but again, do you take insurance against some of these investments? And don't also forget that investors are looking for turnaround, and that's one of the reasons why we come to emerging markets like Nigeria, because this is where in coach you can get unimaginable amount of profit. But again, no risk, no gain. So
Precisely.
but there must be a reasonable threshold. How do you balance your investment portfolio? Don't run away from Nigeria. Diversify your investment portfolio. And then I think things will follow.
Thank you very much. I hear a need for due diligence. I hear the fact that this is a large economy and a large tech ecosystem that will continue to nurture and sustain startups in fintech. I hear Dr. Adeosun say he is not averse to youth leadership in the sector, but there is a need for some level of maturity, especially when you begin to hear the kind of sums of investment that these startups are attracting. Well, we will leave it there. I'm sure we'll return to this in the weeks ahead. At this point, we will take a break and we will be back. Be sure you don't go. Is Business Week on BusinessDay Television. Before we went on break, we were examining the long list of failures in the fintech sector, and just looking at what is particularly Nigerian and what is a global phenomenon. We will now go on to talk about the 15% import tariff that the government has decided to levy on imported petrol and imported diesel. Tariff everywhere is regarded as a tax, but tax is a tool for government to re-engineer the economy. In this particular case, the sense is that the 15% tariff is aimed at protecting domestic refining to ensure that Nigeria's pace towards industrialization does not suffer a shipwreck. Dr. Adeosun, how do you see this introduction of 15% tariff on imported petroleum products?
Thank you so much. Nigeria was a ministry, I would have said this is our year of taxation. That will have been our mantra and slogan for this year. Again, if you look at it at the surface, very plainly, on one hand, it looks like a very good idea, because the crux of the matter is that we are trying to protect local refineries and the modular refineries. Okay,
which are also local.
Which are also local. So this 15% increment introductory tax, let's put it that way, will roughly ensure that when you import products to Nigeria that is oil related, you are going to add about 99 to 100 naira to the landing cost. So this is a direct burden to the final consumer if the products they are buying is imported. However, the consumers don't get to choose how products are sourced, whether locally or via import. Okay, but if the local production capacity is adequate to meet our local needs, and by adequate, I don't mean what they're able to produce, because you may produce a certain quantity. What you now sell to the local market, that's another conversation entirely. So, are we not looking at a situation where we will have the fuel of price per liter consistently over 1,000 naira? So, these are some of the issues. How would this impact on the common man, the person who needs fuel to power their machine, to grind pepper, okay, to power their generators for their small businesses? So it's looking increasingly like this is additional cost. But on the flip side, it's also looking like the government is trying to ensure we drive self-sufficiency in terms of local energy production, which I think is good. I wish we are able to get more refineries on stream. Again, don't forget sir, that many licenses were issued. How come only Dangote is the notable one and a few modular refineries? Because I don't want us to create a monopoly. It will be good if this thing is working from a competitive market perspective, not from a monopolistic or oligopolistic perspective. Again, we don't want to be reliant on the goodwill of Aliko. What if he changes his mind or something? So the government should proceed cautiously.
But let me ask, I've heard people talk about monopoly. I've heard people talk about competition. What I don't understand is it a competition between manufacturers locally, or is it competition between local manufacturing and importation? People talk about monopoly. What kind of monopoly are we talking about? We have regulators, as you said. Licenses have been issued. If the government was not to be issuing license, you can say that they are engendering monopolistic tendencies. But if they are issuing licenses, isn't the case that in competition it is the best that survives? In a capitalistic market, it is the best that survives, and the best can also mean who has access to capital. The best can mean who has the courage when he has that capital to launch and dare. Don't forget that there have been allegations in the past of importers of petroleum products bringing in sub-spec products into the market. How do you deal with all of this if all we are saying is that government should just sit down and hold its hand and just allow unhindered importation to go on, squeezing our foreign exchange position? So I am I'm just confused. What I hear doesn't seem to match up for me. I hear people who talk about monopoly, and I'm wondering what in their view is monopoly. I hear people talk about competition. I'm wondering what is competition. Isn't there a time for Nigeria now to put an end to importation of petroleum products, especially given that the Dangote refinery has since announced that its output far exceeds domestic consumption?
So thank you so much for those questions and also widening the conversation. First and foremost, my perspective here is from the market's reality. Mm-hmm. I'm speaking from the perspective of the people. What do I mean? Who are the people? The everyday citizens. The rackets involved in importation of petrol, or those who consume petrol? We the consumers. Because your perspective and position matters, so that your thoughts can be contextualized. Mm-hmm. Now, if we are producing locally. Yep. Is it if? No, I'm going somewhere. Yeah. This is an hypothesis now. Mm-hmm. If you are producing locally, yep, and you can produce relatively cheaply, why should anybody import? When you say relatively cheaply, how can you do that? Dangote refinery buys its crude from the international market. So when you say relatively cheaply, what do you mean? So if you buy from the international market, but you eliminate logistic cost or part of it, because the international market is from Nigeria, it's Nigerian that you are buying from. There will be what about the conversation around cheap, low quality fuel being imported into Nigeria? So would that create a fair, equitable competition? Now you mentioned the word low quality. Mm-hmm. Should low quality be allowed? That's the job of the regulator. There are minimum quality or thresholds. Mm-hmm. So it is either the fuel is qualitative enough for the Nigerian market by Nigerian standard or not. Mm-hmm. So you can have grade A, grade B, grade C, mm-hmm, and the owners of vehicles or equipment can buy whichever grade they opt to. But what I'm trying to infer is that at the end of the day, it is not just by imposing a tax to now discourage importation. If you have comparative advantage
when you impose a tax, yes, you seek to influence behavior, is it not?
True. But I'm saying that should not be the only tool. What do I mean? You gave maybe 40 licenses. Only 3 are operational. What have you done?
What do you think government should do?
There are things you can do.
Like,
For example, you can withdraw the license.
does it matter whether they withdraw them or not?
It matters. You
What
can
the-
open up a fresh round of licenses.
No, but they have more licenses to issue. Did they tell you that they've exhausted all the
So
licenses?
you need to provide.
Unless you're suggesting that government should go and provide capital to people to set up refineries.
No.
Okay, so
but
what
you
should
can
government
create a positive investment.
like?
climate. You can use moral suasion. There are other wealthy Nigerians or corporations that you can say, oh, come and set this up. For example, recently on this platform, we talked about Tolu Ogunlesi. So we should continue to woo investors to come.
Yeah, Tolu.
We are happy Dangote is doing well.
But Ogunlesi,
10 Dangotes will pay us more than one Dangote. Or do you just think survival of the fittest if it is only one fit person? What happens when that fit person becomes injured?
no, that's I'm not saying this, but I think Nigerians have to be patient. You have one refinery, and we know how many years it took that one refinery to stand. We hear BOA, another big investor, proposing to build a very large refinery as well. These things take time. Nigerians are not patient. The market was only deregulated in 2 years, only 2 years ago. So the licenses that you are speaking of were licenses issued when the market was still not deregulated, when the market was being manipulated by the government. And since after that deregulation, we expect that the positive impact of the deregulation will ripple through the system over time. But let me ask you, the fact that imported petrol will attract 15% tariff, does that necessarily mean increase in petrol price? And will that remove the option that Nigerians have to buy from stations that are selling domestically refined petrol that will be cheaper than imported petrol?
So, when pricing, there are different factors that come into pricing. So things like your efficiency, your supply chain management, and so on and so forth. Already with that 15% tax, it is crystal clear that you have 99 naira 72 kobo addition to the landing cost. This best case scenario. Of course, if you have other inefficiencies, the landing cost
does that necessarily mean that the petrol from Dangote, the price will go up by 99?
We can't say. It is their choice.
Should it?
Dangote increases or reduces price.
No, because no. If Dangote petrol price goes there, then the objective that the government seeks, which is to create a barrier against importation of low quality petrol, will be defeated.
Well, government can take position, but individuals or other organizations in the oil and gas sector will find a way to survive. Don't forget that
so far, Dangote hasn't said that it is increasing the price of its petrol, has it?
For now, it has not.
But you expect that it will?
But what if other people who bring petrol in, for example, are no longer able to bring it in? Or they bring it in at a higher cost? Don't forget that businesses are there to make profit. So we cannot predetermine the reaction of Dangote or any other player in this field.
I guess you. But in the end, Nigeria would have to make its choices. As you make your bed, so you lie on it.
Absolutely.
Over the years, in fact, over decades, we relied totally on imported petrol. Now we have one of the largest petrol refinery in Nigeria working. When it came on stream, we all celebrated and said, this is a game changer. Now the game is about to begin, and some people are suggesting, oh, let's go back to the old rules. It can't be. If it's a game changer, I believe that government has a duty to ensure that the rules of the game change.
But when you say a 15% tax is an old rule, this is a new rule.
No, but no, it's a new rule. That's the point. That's the point that I'm making. Is the point that I'm making. It's the business of government to ensure that as the game unfolds, that it ensures that the overall interest of Nigeria is maintained. I have been a journalist in Nigeria for a very long time, and I know that the petrol import syndicate is a very strong one. The noises that I'm hearing is largely from this syndicate. If you put in this tariff, Nigeria is going to, the hell will be let loose. I would say let it be let loose. Let us see what will happen. If we have a refinery that is a game changer, for goodness sake, let it indeed change again. Anyway, we will take a break at this point, and when we come back, we will look at the economic implications of the threats by the U.S. administration to launch strikes against militants in Nigeria that it accuses of senselessly killing Christians in the northern part of the country. Please don't go away. We'll be back shortly. This is still Business Week on BusinessDay Television. We'll turn our attention to looking at the economic implications of the threats by the U.S. President Donald Trump to launch military strikes against militants in Nigeria who have been alleged to be senselessly murdering Christians in the northern part of the country. Well, the threat is real. And it's not only that the threat is real, Trump is not guided by rules. We have seen strikes in off the coast in Venezuela and Colombia, purportedly aimed at drug pushers. We know that there isn't any evidence that that is the case. So no one expects Trump to be nice when he says he wants to do anything. So what should Nigeria be doing, and what are the implications for the economy of Nigeria?
Okay, regarding the implications, I think this is really bad news for foreign investment because foreign investors are careful not to be seen to support countries that are falling on the bad side of Donald Trump, right? So and that's really precarious for a country like Nigeria, given that we've seen a raft of reforms that are supposed to really start to attract foreign investment. Yes, exactly. So, but this is just a real tough blow. It could significantly impact interest in Nigeria from foreign investors. We're waiting to see what happens this morning to see how the stock market will react from that. There are a lot of predictions that might be the first place to really see the impact of this. But generally speaking, it's not so good. It's really because if you look at the antecedents now, the countries that Trump has gone on to invade on grounds like this, it's had devastating impact on their economies, whether it's in terms of attracting capital or even just continuing the pace of investment by even the local investors. And that definitely takes a hit on economic growth. So it's not really good. It has very bad implications for the economy, but I think that hopefully it doesn't fully materialize because maybe some people have said this might be a failure of Nigeria's diplomatic efforts. Really, it came to our leaders as a surprise. Some people say it shouldn't have been a surprise, really. It just shows that we've not really been so good in terms of managing the situation with the US. And really, maybe we'll start to see some action now and then. Hopefully that just helps to ensure that the real impact of this doesn't come to full bear in Nigeria.
Some people have suggested, for instance, that the absence of
ambassadors,
Nigerian ambassadors around the country is a big gap.
Yeah.
At a time like this. But to you, Dr. Adeosun, has the government handled this well? Lolade has alluded to the possibility that we're not even vigilant, and that this may have come as a surprise to some people. But it shouldn't have, because for months we've been hearing this, and we never heard anything that suggested that the government was engaging.
Absolutely. That's the key word. Evidence of Nigerian government engaging. Let me say that just recently, the last 1-2 weeks, we saw a change of guards with respect to the hierarchy in the military. And just were told that is to maybe double efforts with respect to quenching militancy, banditry, insurrection across, even though there are parallel rumors, but that's another story for another day. Why is this concerning? In the last 2 years, through some of the economic reforms, we've made some, let me use the word, delicate or fragile gains that are yet to really
fully
manifest, and especially because there's a lag between economic traction and people feeling it, citizens feeling it in their pockets. This utterance by the President of the United States is not coming at the right time. We need to consolidate, we need to deepen, and we need to succeed. Don't forget that investors respond to sentiment. One of the greatest sentiments around the world, whether we like it or not, whether we think it's fair or not, is the voice of the President of the United States as of today. And things like travel advisory will now begin to be issued. We are now in quotes alleged country of concern or of interest, and we just last week on this platform, this very platform here, we are celebrating that we left a great list.
And we have entered perhaps the worst
another kind of list now. So we take 5 steps forward, 10 steps backward, and it's surprising that we didn't see this coming. We've been hearing things from the Congress or congressmen. We should have engaged. We should diplomacy.
And in my view, I don't know how you engage when you don't have ambassadors. So perhaps this is the time now to state very categorically that on that front, this government misfired.
3 years.
And it has done great disservice to the interest of Nigeria. The other point is, we've been hearing these rumors, we've been hearing talks and noises coming out of the US Congress. And as I said, there wasn't a single indication we got that the government was engaging. It wasn't engaging internationally, it wasn't engaging locally. I would have thought that at this point, the least you would have expected is that maybe 3 months ago, a delegation of high-level, credible Nigerians, mandated by the president, would have gone out to the United States, just firstly to meet leaders of the Christian groups in America who are championing some of these policies against Nigeria, and to just present a better picture. In truth, the argument that I've heard is that it's not only Christians that are being killed, that Muslims are being killed as well.
Yes.
Now, what I heard this morning was that the fact that Muslims are being killed does not deny the fact that Christians are being killed. Trump is only interested in the Christians. Nigeria's government should be interested in the Christians and be interested in Muslims as well. But perhaps more importantly, what I'm hearing is that this government is going to 3 years, and so far, the attempts made to deal decisively with militancy in the northern part of Nigeria has been very, very weak. And of course, the results have been below par. What do you think?
So again, I think Nigerians, the media, we've been shouting, we've been crying, a few people right here and there. And let me say this respectfully, that sometimes because some of us stay in Lagos, Abuja, Port Harcourt, we may seem alienated from some of this crisis. While I agree that there are some elements of exaggerations, but the reality is stark. Go to Plateau, go to Benue, go to Taraba.
Where you have a reverend father as governor.
Kwara. So and like you said, we are not seeing strategic police action, strategic military action.
Military chiefs go and come, but
same.
Nothing to show that
I wish this cry is from Nigeria by Nigerians.
Yeah.
I wish it was the House of Assembly, National Assembly in Nigeria saying, "Oh, government, come and a state of the nation." Sir, we had my final point for now. We had a state of emergency
in River State,
but we've not had in Benue, we've not had in Plateau, we've not had in Kwara. So is political interest more significant than humanity, than life? The truth is, anybody can say maybe Muslims are being killed as equally as Christians. I don't care. One thing is established: people are dying.
And government, is not doing enough.
Yeah.
I'm afraid we are out of time, and we must bring our conversations today to an end. Lolade, I'm sorry, but keep your fire for next Monday. That's it. This edition of Business Week. We'll see you at 9 a.m. on Monday, the 10th of November. Bye.